back to the Crypto Saving Expert news show, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess, and today we are running through the latest news on the Crypto Saving Expert website, the best cryptocurrency website out there. Let's take a look at the markets first of all and see what is happening. We have Bitcoin currently sat at $24,630 and Ethereum sat at $1,688. So clearly we have seen a nice move to the upside in the last couple of hours. We are going to be discussing why in today's video. When we look at the cryptocurrency news, we've seen an 11% increase for Bitcoin in the last 24 hours. Let's quickly take a look at that price chart. We've seen a clear move to the upside. On the indicators right now on the daily chart, you can see that the MACD is about to tick bullish. So we have lots of bullish momentum in the bigger time frames here as well. So things are looking positive. It's nice to see this move to the upside. A lot of people were getting quite fearful in these times. The news was getting pretty bearish once again, but we will cover today's news and see what's happening. We have some not very nice news to start with, and then we're going to finish today's video with the bullish news and talk about how it has impacted the price in this bullish way. So let's first of all take a look at the first piece of news, which is the German tech giant Siemens launches blockchain-based digital bond. So according to a press release, the bond, which has a volume of 60 million euros and 1 year maturity, has already garnered several investors, including DZ Bank, DZ Bank, and Union Investment. Siemens claims it is one of the first companies in Germany to issue such a bond and calls itself a pioneer in the ongoing digital transformation of capital and securities markets. Notably, blockchain bond issuance has been possible in Germany since the country's Electronic Securities Act was enabled in June 21. One of the benefits of the bond is that it eliminates the need for paper-based global certificates and central clearing. Commenting on the issuance, their chief financial officer has said, "With our innovative products and technologies, they support the digital transformation of its customers with great success. It is therefore only logical that we test and utilize the latest digital solutions in finance too. We are proud to be one of the first German companies to have successfully issued a blockchain-based bond." This is exactly what we want to see. We want to see the industry being adopted, and we want to see these big companies being excited about it being adopted. Taking those first steps into the industry and exploring how it can work in different businesses. Let's take a look at the next article now to see what is happening here. To support Web3 startups, Abu Dhabi has launched a $2 billion initiative. So obviously Abu Dhabi is kind of like what's it called? The hotspot for crypto? Is that? No, there's another word for it, but that is what I mean. While the regulation situation in the US gets more complicated daily, we have more news covering that in just a second, other countries are looking to capitalize on blockchain and Web3, aiming to bootstrap this technology sector and become a technical hub. Abu Dhabi has announced a $2 billion initiative to attract projects in the Middle East. So as we've been saying in the latest videos, the US is regulating cryptocurrency in a very difficult way, I would say, and they are pushing people out of the jurisdiction. People are just like cracking and no longer offering staking to US citizens, but they're offering it to non-US citizens. They're making it difficult for US citizens to be involved in the space. So when all the jurisdictions step up and make it easy and help cryptocurrencies grow in those countries, then it means that people will be looking to Abu Dhabi as a place to set up their companies. Abu Dhabi will benefit greatly from the cryptocurrency sector because right now it's not going to away, it's going to continue to grow. Those countries with stricter regulations are going to be the ones that fall behind. And we can see here Abu Dhabi is stepping up to the plate while the US is clearly not. We'll talk about that in a second though. Abu Dhabi's Hub 71 tech ecosystem introduced a new project called Hub 71 Plus Digital Assets. The ecosystem aims to advance Web3, a decentralized online environment based on cutting-edge breakthroughs like blockchain technology and metaverse apps. The new ecosystem will invest more than $2 billion in Web3 businesses and blockchain technologies in Abu Dhabi. Hub 71 Plus Digital Assets will give Web3 entrepreneurs access to various programs, initiatives, and corporate, governmental, and investment partners in the UAE and other international markets, as stated in their press release. Now we go on and on in this article, but that's the general point of this article, that we're going to see them They're trying to become the cryptocurrency hotspot, and that is what they have achieved in recent years. Many people are already looking at Dubai as one of their best places to set up cryptocurrency companies, and they're continuing to try and grow on this basis because they have attracted a lot of people through cryptocurrency. But let's move on to the next article now. We have FTX pursues $400 million invested in a little-known hedge fund by SBF. So the FTX leadership is currently pursuing recovery of a $400 million invested in an obscure hedge fund, Modular Capital, by the former CEO, Sam Bankman-Fried. Essentially, Sam Bankman-Fried's invested $400 million, and now they are trying to get that back because they need as many liquid assets as possible. According to reports, Modular was founded by two former traders at Jane Street in New York. So Jane Street is where SBF worked prior to his arbitrage trading, I believe. The reason we haven't said this on the channel in a while, I don't know how many people know this. Sam Bankman-Fried actually used to work at Jane Street, which is a place where they just buy and sell assets with really small, they're market makers. They will buy and sell immediately and make a very small profit, but they do this on a huge scale and repetitively to make their money. And then obviously Sam Bankman-Fried was interested in the space. He was working in Jane Street, and then he noticed an arbitrage opportunity. There was quite a famous arbitrage opportunity at the time between the US and Japan. Don't quote me on that one. It might not be Japan. And you could buy Bitcoin for 50% cheaper in one jurisdiction than the other, send it over, and then get that 50% gain, and that created an arbitrage opportunity. But that was a bit difficult because of the wire transferring from country to country. So Sam Bankman-Fried found one in Korea instead, and this was called the Kimchi Premium. He could buy Bitcoin for $10,000 in the US, send it to Korea, and then sell it for $15,000 around those banks. That's the general idea. So he could continue doing this over and over again, create this circle where he's just making, actually I think this was a 25% premium, so he was able to sell it for $12,500. So he was immediately making this 25% on his money over and over again. So he found investors, he found a team of people, and he made his money this way by arbitrage trading through the Kimchi Premium. And then with those profits, he set up FTX. So a pretty smart man manages to find a goal, set a goal, and achieve it, because capitalizing from that Kimchi Premium wasn't easy. There's a big process to go through. He spoke about this in previous interviews. And this is where he was seen as this brilliant person within the cryptocurrency industry, like the mastermind of crypto, because he had taken advantage of the opportunities that he saw in front of them, and they weren't just a step-by-step easy thing to do. But then obviously it all came out about how he was operating FTX behind the scenes, and that king persona that he had was shattered very, very quickly. Taking a look at this, so then obviously FTX has fallen apart. It was a bit of a off-topic thing to say. FTX has now fallen apart, so they're looking to get his liquid assets. He's funneled money into he's being accused of funneling money into things he shouldn't. Conspiracy of wire fraud, and 4 other crimes he's being charged with at the moment. He's not going to court. The court date has been pushed back. We saw that in news yesterday. But now the new FTX leadership is currently pursuing recovery of $400 million that SBF had invested. So now we are seeing here, FTX is now negotiating the recovery of the fund, which is currently stored in the interest-bearing account at JP Morgan Chase, according to a New York Times report, which cited 4 people familiar with the matter. The people said the founders of Modular converted the holdings to cash and stored it at JP Morgan, which served as the hedge fund's prime broker shortly after the FTX went under. The founders are not accused of any wrongdoing, but are looking for FTX to release them from certain legal liabilities in exchange for returning the money. So that is what we are seeing here. New news is coming out about the FTX scenario every single day. It's getting very, very interesting. But as I just said, yesterday we heard that the court case was being pushed back, delayed slightly, so it may take a little bit of time for this to all unravel. But let's move on to the next article we have here today. We are crypto demonized in recent Senate hearings. We're talking about the US regulations again. We've got 2 articles on this today. I know it covered a lot of yesterday's live stream, so We won't talk about it too much. The SEC are attacking many different cryptocurrency companies at the moment, and we are seeing it impact the markets heavily, but we have had a pump today, and this could possibly, it's about a rumour that the SEC was going to charge a specific company, but we'll get onto that in a second. In the past few weeks, we have seen discussions into regulating cryptocurrencies amp up from the US government. This has come in form of the SEC going after exchanges operating in the US who offer staking services. So we saw Kraken, who offer staking services in the US. The SEC said that they were offering unregistered securities because they think staking cryptocurrencies is a type of security. So whether an asset is a security or not is determined by the Howey test. The Howey test is a set of 4 rules, and if those 4 rules, well, not rules, 4 criteria, and if these 4 criteria are met, it means the asset is a security, and if it's a security, it needs to be regulated by the SEC. And the SEC don't make life easy for you, so a lot of cryptocurrencies like to be labelled as a commodity instead, because that's a lot less difficult to regulate. We can see here that Kraken have been charged with offering unregistered securities. They said they're going to stand up against this, and I think Coinbase agreed the same as well, and they do not believe they are offering unregistered securities. But we can see here, obviously in this scenario, you can tell the lines are a little bit blurred. Regulation isn't too clear. And that has caused a lot of companies to also just move out of the US completely because they haven't had the clarity they need on the regulation in the US. And we've also seen that some companies just don't operate there because of the blurred lines. But let's take a look at this. The consensus among the US government is that crypto needs to be regulated. However, the route for regulation is still in question. So what we need now, I'm on the side that we do need regulation in cryptocurrency. We need to be able to grow the space in the correct manner. But we need that regulation to not stifle the growth of the industry, and that's what we need to be careful about. We don't want to, the whole point of cryptocurrency is that it's decentralized, it's transparent, we all know all this, but if we take some of those aspects away from the space, it's taking away the need for it. So that's what we need to be careful about, and we need to make sure that it's getting regulated in the right way. So it'd be really good if they could be transparent in their approaches of regulating crypto, so that the industry can work with them to understand the best way to regulate it and continue forwards. But Senator Elizabeth Warren has said just last year, just in 1 year, crypto was the payment method of choice for international drug traffickers who ranked in over $1 billion through crypto. North Korean hackers who stole $1.7 billion and funneled that money into their nuclear program, and ransomware attackers who took in almost $500 million. The crypto market took in $20 billion last year in illicit transactions. So the comments failed to demonstrate a basic understanding of cryptocurrency. Due to the immutable nature of blockchain technology, every transaction stored on the public ledger is traceable forever, making crypto less anonymous and therefore less desirable than cash. Just last year, the US Justice Department seized $3.6 billion worth of crypto using a unique type of technology that utilizes a large data set in combination with the blockchain to connect transactions to people, highlighting its utility. Now, we have seen in the last couple of weeks, I think it was FTX, it may have been a different, maybe it was Celsius, one of the two. The regulators were trying to get liquid assets out of the companies and just did it in a completely wrong way, lost a huge value of money because they didn't understand how cryptocurrency really works. And this is why I'm saying the governments need to work with those within the industry to understand how it works, how it's growing as an industry, and the best ways to regulate it, because you can see they're so against cryptocurrency that it seems that they just don't want to learn about the space. Let's carry with this article and see what is happening. If a bank was robbed 5 years ago and you're still trying to chase down those leads, you have no idea potentially where that stolen cash could be at this point, said this guy who is the lead crypto investigator with the Internal Revenue Service. He went on to say, with cryptocurrencies like Bitcoin, every transaction is on a public ledger, it's public, and it's there forever. So I just think we need more education in this. We need more transparent regulation so that we can all work together instead of the SEC attacking the cryptocurrency space and the cryptocurrency space saying, what are you talking about? And trying to prove these points. And if we all work together, it could work a lot more smoothly. We could have more clarity and we could have more transparency of how this is going to work. And the space can continue moving forwards. At the moment, it just seems like this huge battle and no one's really getting anywhere. The SEC are having a lot of lawsuits. I mean, we've seen XRP fighting this battle for a long period of time. It would just be a lot better if we could all work together to help the space grow in the correct way, but the likelihood of that happening is slim. Let's take a look at the next article, and it's the SEC to vote on proposal for stricter crypto custody requirements. On that note, actually, before we move on to the next article, we were seeing SBF prior to the FTX collapse working very closely with the New York the New York team trying to regulate cryptocurrency in the right way. He actually did a blog post literally days or weeks before FTX collapsed, discussing how he wanted cryptocurrencies to be regulated. That sort of thing is what we need to see. We want to see them working with the big players in the space, understanding how it works and how it should be regulated in the correct way. Obviously, Sam Bankman-Fried is not the perfect example to do this since that's happened. Those regulations ideas have kind of been pushed under the carpet. But that was happening with Sam Bankman-Fried before we all saw him for what he actually was. Before we continue today's stream, please don't forget to like and subscribe and press the bell notification button so that you don't miss these daily live streams. We do these every single day, talking about the latest cryptocurrency news and taking a look at the markets so that we all know exactly what is happening. If you are new to the space or you have any friends that are new to the space and you don't know how to get involved, Crypto Saving Expert is the best way to do so. Listening to these live streams every single day is a great way to hear the different terminology, discuss things in a way that is easy to understand, and you learn how the markets react to certain pieces of information. And if you want even more than that, then head over to cryptosavingexpert.com, press that sign up button here, and you can get free cryptocurrency courses, guides, the latest and most reliable cryptocurrency news, and you can have all that market data there as well. So don't miss out on that. It's completely free. Let's move on to the next article here, and we have the 5 commissioners of the US SEC are scheduled to vote Wednesday on a proposed rule that would increase the qualified requirements on how registered investment advisors custody assets, including cryptocurrencies and even physical assets such as artwork. The proposed rule would add protection for assets held by an investment advisor and widen custody requirements to include any client's assets they hold. The rule also recommends implementing surprise examinations, annual evaluations from public accountants, and provide account statements. In addition, the proposed rule requires investment advisors to segregate all their investors' assets as opposed to the current requirements of segregating funds and securities. And the SEC have said these protections are designed, amongst other things, to ensure client assets are properly segregated and held in accounts designed to protect the assets in the event of qualified custodian bankruptcy or other insolvency. So we're seeing this off the back of the FTX collapse, clearly. Not too bad. Let's move on to the next articles though. We are starting, this is the last piece of news before we get on to talking about the Bitcoin and Ethereum price. We have here Celsius creditors Sue Mashinsky and former top execs for millions of dollars. Now, this is because it's alleged that they cashed out of the platform before it went under. The Celsius network, obviously, I'm not sure how many of you were around in 2022, filed for Chapter 11 bankruptcy following the FTX collapse because they had too much exposure to the markets during this downturn. And we can see here that the former executives of the platform cashed out millions of dollars before it went bankrupt, and you can see a list of these here. And the lawsuit added that the defendants spent hundreds of millions of dollars of user funds to inflate the price of the Celsius native token Cell for their direct benefit. They then secretly sold tens of millions of Cell tokens as they directed Celsius to purchase the Cell tokens on public market. Finally, when it became apparent that Celsius would be required to file for bankruptcy, the prosecutor's defendants withdrew assets from the sinking ship while actively encouraging customers to keep their assets on the Celsius platform. So this is what we're seeing here. Very, very interesting, very malicious moves there. Causing a huge effect for those investors and those that were using the platform that was seen as a pretty trustworthy platform. Let's move on to the next piece of news. We have some positive news about the markets now. We can talk about all the positive things. We've got through all the negative news for today. Somebody said in the chat, daily lives becoming a new routine. Thank you very much for tuning in every single day. As I said, it's the best way to get into cryptocurrency. Please share with your friends, your family, anybody that's interested in crypto, and this is a brilliant way to help them get started. Please don't forget to like today's stream and subscribe and press that bell notification button so you don't miss out on these daily live streams. Let's take a look at the next article here. We have Singapore banking giant DBS says Bitcoin trading spiked 80% amid market crash. So we are actually seeing People still trading during this trend. As per the report, the exchange said the number of Bitcoins in its custody as of December 31st, 2022 was more than twice the number from a year earlier. We've seen this from multiple different data sources. Crypto.com did an article a couple of weeks ago as well, that the amount of wallet of users in cryptocurrency continued to grow throughout 2022 when we saw that huge decline. The peak was in November 2021. And we saw that huge decline of over 60% for Bitcoin and way more for many of the altcoins. But it seems that people are still interested in the markets. Even I was speaking to some friends in 2021. They were involved in this space. We were looking at all the different things. I was trying to educate them on how to trade, how to invest, what to look for in altcoins and things like this. And they were all getting pretty excited, made some nice money. And then the markets crashed. They lost all their interest. They weren't really involved again. But I've already seen them piquing their interest again, asking me about different things as well. Interest is coming back into retail investors pretty early, which is pretty exciting for me to see. Let's take a look at the next article. We have Ethereum is going to have the Shanghai upgrade, and this is in March. Here it is, between March and April. So this means that people can unlock their staked Ethereum. Now, people were staking Ethereum from over a year ago, I think. The merge happened September 2022, so it was then September, and then people could stake their Ethereum and earn interest for doing so, but they couldn't unstake their Ethereum until the Shanghai upgrade goes live, and this is meant to be in March and April. Now, this has caused a huge amount of concern for the cryptocurrency space because people are worried that this is going to cause a huge amount of selling pressure. These people haven't had access to their Ethereum tokens for months and months and months, and now they're allowed to get access to them. Will they sell them or will they hodl? Who knows? But it says here in this article by Coinbase Research, they have said that they don't believe there's going to be a huge amount of selling pressure. They've said Kraken's decision to wind down its staking business in the US has added to the uncertainty surrounding ETH market supply dynamics after the Shanghai fork. The team added, this is also because Kraken hold our third biggest stakers for Ethereum, I believe. The team added that Kraken unstaking its Ethereum would result in a 350,000 up to a maximum of 1.145 million additional ETH that could potentially circulate the market when staked ETH withdrawals are enabled in the Shanghai fork. However, they do not believe there will be much selling pressure since Ethereum withdrawals will be rate limited to 7 validators per epoch or 1,575 validators per day. As a result, it would take a minimum of 7 days and a maximum of 23 days for all of Kraken's withdrawals to be processed. Therefore, the Coinbase research team forecasts that the selling pressure around the Shanghai upgrade will not be as severe as expected. What's unclear is if the unlocking of this additional ETH could be a catalyst for selling pressure. Although the regulatory environment has muddled the outlook somewhat, we believe the selling pressure should still be fairly limited, as we believe there is mitigating factors and self-correcting mechanism that should help control the flow of ETH on the open market. So interesting here. I mean, stories like this, even though the actual reason for the concern, as Kraken is the concern in this instance, seems to be okay and gradual, and obviously it's not just an immediate dump into the market. The fear in the markets by retail investors is what would actually impact the price. So that is something we're looking at here. Coinbase research is saying there's nothing to be concerned about, but you never know how retail investors are going to react to news like this. So just something to be aware of. And finally, we have the positive news of the day. We have Bitcoin eyes $24,000 after Circle debunks SEC Wells notice rumors. Obviously, as I said at the start of today's stream, if we take a look at CryptoSavingExpert.com, Bitcoin is sat at $24,630. We've seen a nice move up to the upside following USDC saying that they have not received a Wells notice. So this is the thing that BUSD received, saying that they could be researched into. And BUSD obviously have said they've stopped, they're not minting any more tokens. But USDC's who is this at USDC? The chief strategy officer has said that the stablecoin company has not received a Wells notice, so nothing to be concerned about, and this has been the catalyst for this nice move to the upside for Bitcoin. So that is what we are seeing right now. Very exciting things to come for Bitcoin, very interesting, and it's nice to see volatility back in the market. But that is all we have for today, so thank you very much for tuning in and subscribing, and make sure to press that bell notification button before you click off today's stream. And hit that like button as well. If you haven't already, go to CryptoSavingExpert.com and just check out this website. It is so good. It has all the information you need to know about cryptocurrency. And just make sure to press sign up. And when you do, press that tick button there so you get our newsletters every single Tuesday at 11 a.m. updating you on the latest week in cryptocurrency. But that is all from me. Thank you very much for watching.